Now, my first guest tonight says for every story of easy money made from trading things like marijuana stocks or cryptocurrencies, he can tell you a story of how darling tech stocks of Bay and Wall Street suddenly came crashing down in the dot-com days. Here to share what he says are things every investor should know to avoid big trouble is Brad Simpson. He's Chief Wealth Strategist at TD Wealth. Nice to have you back again.
Great to be here.
Auspicious times, all the interesting things we're talking about right now. But I always kind of thought, I can't remember who said this, but if history doesn't repeat itself, it certainly does rhyme, doesn't it?
Yeah, indeed. Indeed it does. And I believe that was Mark Twain.
Thank you. There you go. You're the literary sort. I knew you'd know that.
Yeah, and you know that it's really quite. They are quite of amazing times, and you know that I think it was around late December. We were sitting in our office, myself and one of my colleagues, Chris Blake, and he kind of walked into my office and he was kind of exasperated, and I said, "Well, what is it?" And I just can't possibly talk about Bitcoin or marijuana stocks anymore. We were inundated.
Because that's what the public wants to know about.
We're inundated with it. In fact, I was in Ottawa today speaking to a group of investors, and within 10 minutes, it leads to a discussion. And it really does remind me, maybe not of the breadth or the importance, but it really does remind me of the late 1990s and when we were in the middle of the internet craze.
Yeah.
And it certainly has a lot of that feel to it.
You, I should mention too that you put out a piece which you send out, and I like the name of it, Fables, Foibles, and Bubbles.
Yes.
You talk about this and I remember, because I remember covering this stuff, 360 Networks. I remember theglobe.com and all that good stuff.
Yeah.
But what I loved about your piece is you brought in some pictures to kind of show graphs about what this stuff means for an investor. Because yes, it's sexy headlines and it's fun.
Right.
But I want to bring up this one. You've got a chart here. I think we're taking a look at the Nasdaq and just what it takes to break even again when something goes wrong.
Yeah, to me, this is
not to be depressing.
Yeah, but no, this is kind of was the starting point, right? Like during that era, if you had the opportunity where if you didn't invest in this, it seemed like madness. And then every day they went higher and higher, and these self-fulfilling prophecies of that it will get better and better. And at some point it stopped, and the market went down 76%, and a 76% loss. If you're turning over around 8.5% rate of return afterwards, which is closer to kind of what your average is, you're almost 18 and a half years to get back to even again.
That's a long time.
That's a very long time, right? And I still am caught off guard when I see the Nasdaq today where it is, because for so long it was under that 5,000, right?
Yeah.
And it's a fairly recent vintage that we've seen it go over that.
You had another thing that I want to bring up, where I think we've got a piece here where you're showing the phases of a bubble.
Yes.
And I think it's stealth, awareness, mania, blow off, and if we can take a look at that. You included that, I'm assuming, because I don't think you're talking about and correct me if I'm wrong, the market. You're talking about specific things we're seeing within the market.
Yeah, I'm not talking about I'm not talking about the overall market there. Really was even the title of the paper we wrote is and it kind of all ties in, right? You start with the fables of riches, right? And then once you have that, you start to lead to the foibles of kind of what that end and the bubble hits. So when we included kind of what does a bubble look like? What does that process look like? And have you go through the steps of it? Kind of we're kind of at that stage right now. The best way I can look at it is that a couple weeks ago I was out and my mother-in-law, who has never been an investor or interested in business, I was out for coffee with her, and she whispered over to me and said, I have all kinds of friends making money in marijuana stocks. And I've known her for 30 years. She's never mentioned an investment before.
I think this is the mania phase.
And this is the mania phase, right? It's when it's become part of popular culture. It's chat everywhere, and that's and that the so-called gas station story. But it has that feel almost everywhere. And so I think I think we've been in that mania phase. Some think we've maybe been through the blow-off phase because we had a little bit of a, obviously we've seen an awful lot of, in the cryptocurrencies, a lot of volatility. But I think we have a lot of froth that's pretty alive and well there still.
We, what would you say, I mean, do you think we're in the blow-off phase now with crypto?
No, I don't. I think it's
we're still going up.
I think it's kind of like
it's come off a lot.
It has come off a lot, and I think that ultimately this doesn't connect with the bigger market, but what I do think there is a connection was we had a market correction last week,
yeah.
full market, right? And,
yeah.
and I wrote a paper called Relief Rally with it, and part of that idea was that it's been so good in the major markets for so long that one of the things happens is that you start to feel wealthier, the family purse gets a little heavier, and what happens is you start to have more of a kind of a slush fund where you start looking at these things, right? So I think because the general market over itself has corrected so quickly, I think we'll start to see if that continues, and we've saw this, that I think you'll start to see the kind of the cryptos and start to come back into popular again. Because I think it's still, until you have that longer term kind of correction, there's still that we're through that, now let's get back. For a while it was the serious money stuff where you're worried about it, right? But I think that no, there's a ways to go still.
One of the things that's really interesting is human nature within these types of things. I mean, I always believe that the markets are the best measure of human nature, period, full stop.
Okay.
But you talk about some of these investing blind spots,
Yeah.
and I'm just going to list off anchoring, hindsight, confirmation, familiarity, hard behavior, overconfidence. Overconfidence seems one I think would be ripe for all sorts of things right now, especially with these markets been doing so well.
Sure, they're self-fulfilling every day, right?
Look how smart I am.
I made a decision, it worked. I'll make it again tomorrow, but it'll work. So, and that definitely leads to overconfidence. And let's be clear, that's not overconfidence just to individual investors. I think it's for pros as well, and we delve into that.
Yeah,
right?
well, you talk a bit about, which I think is probably the more interesting piece, is that these are the behaviors.
Yes.
But there's also some hard wiring.
Yeah.
And people are wired in different ways.
For sure.
And if you're wired a certain way, you better be aware of it.
Sure. There's this 5-factor model that has really grown over the last 4 or 5 decades of analyzing our DNA, our behavior, how we make decisions. Not the learned stuff, but like the overconfidence, but who we are and how we were born, right? And I think if we can, and with advances in technology and brain imaging, we're starting to have a real good understanding of how this works upstairs, right? And how we make decisions with it.
Like this is Pavlovian, as we're talking about, right?
So think one of the amazing. So one of the 5 factors is extroversion.
Yeah.
Right, and I'll confess right up. I mean, I would rank high in extroversion.
As do I.
Right.
Yeah.
And so one of the things, if you rank high in extroversion, is you are going to be more inclined to hold more stock in your portfolio. And there's all kinds of great research written that if you get a person who scores high extroversion versus their peers, they'll own more stock. The other part is that you tend to like innovation and be real interested in innovation. And innovation's a really good thing. But if you think how powerful, wouldn't it be wonderful to be able to know that you're a person who's probably more inclined to take more risk and own more stock and
perhaps innovative, and more speculative.
Then more innovative, right? And so let's face it, we're in the middle of a world where we're talking about cryptocurrency in particular, and it is a really fascinating advancement. And this is going to be part of our lives, make no bones about that. But a lot of the things we said in the internet era, they all became part of our lives too. But we lost money for a long time, and many of these things took 20 years to deliver. And I think that if we can start going through the process of really understanding who we are as people, and and I think that's an empowering tool for an investor to have.
I think I think we have a list here of some of the, you mentioned extroversion as one of those hard wirings, but agreeableness, conscientiousness, extroversion we mentioned, open-mindedness, neuroticism. But the one thing I would say is if these are hardwired, they're hardwired.
Right.
So what do you do?
Right. Well, I mean, I think you look at it a couple things. First and foremost is when something is hardwired, you can create buffers around yourself, right? I mean, I mean, I have a really a great group of people who work around me that are real, I'd say, deep cynics. that we're back to even our paper that I wrote with Chris Blake.
Healthy skeptics.
Yeah,
yes.
right. I mean, Chris is, the bottom line is there cash flow in it, and is there going to be more cash flow, and does it make sense? So and the other part is I think it is a really good idea to have people, either a professional or people around you, who are aware of how you make decisions and who you are, right? And then if you have that, I think that can really be a help to help you make decisions, building a team around you, if you will, right? And so if you have an inclinations to a certain way, I mean, I know this of myself, and I also know that when I am building and looking at how we're going to manage money for other people, I certainly always make sure that, I may think something is new and interesting, but that new and interesting might not relate to a good investment.
Yeah.
And so I think that if you can dig into some of those behavioral tools and get those and do that for yourself, I think it can make a tremendous difference.
Great insight as always. Will you come back?
Oh, absolutely.
Okay. Brad Simpson, he is Chief Wealth Strategist with TD Wealth. Again, talking about fables, foibles, and bubbles, and a bit of our hard wiring and what that DNA means for us in terms of our investment decisions.